Hello, my friends. Brett Pattison with Irongate Global Advisors, coming at you from the financial capital of the West. That, my friends, is Salt Lake City, Utah. It is the month of November. It is a great month. We have plenty to be thankful for, both in and out of the markets. And we've got much to discuss today in what is a very busy month of November. First off, let me say this. Everybody is going to sit down on November 24th and partake of a wonderful meal. And Brian and I have been, my partner here at Irongate, we both have been discussing a few different things lately. And I just got to tell you this. I've been with Irongate Global Advisors now for 2 years, leaving TD Ameritrade and Invest Tools, and it's been the best move of my life. There is much pressure that we receive as portfolio managers, and we accept that pressure to perform. But I will also say that there are such great opportunities to talk with people. And just this week, Brian shared with me a text exchange that he had with a client and building a retirement plan. And the response from this client, Brian and I both talked about it, was awesome. And the things that we are thankful for as a business are the opportunities to connect, have exchanges like that, and have people, as they focus on long-term planning, have people realize how much they have. Just this week, I talked with a client who was worried about accomplishing their goals and potentially living till 95 and having enough money. And we crunched the numbers, and based on Irongate Global historical returns, looking out 20, 25, 30 years, this individual told me that they can now sleep at night. How great is that to hear as a financial advisor and portfolio manager? And that's what we're thankful for. That's why I love this job, is situations like that. So that said, I hope all of you have a great Thanksgiving if we don't talk to you before then. And a couple things as we talk about the month of November outside of the wonderful holiday that is Thanksgiving. There's a few things we'll discuss today, which are election update and probability numbers. We'll look at where we are now in the market. We'll talk about November historically, and we'll discuss what we're currently doing. And we'll do this all in just a few minutes. But first, election update and probabilities. These are the current probabilities from 538.com, who I respect quite a bit. We've got Hillary Clinton at a 65, almost 66% probability of winning Donald Trump over, becoming the next president. That number has come down from about 85%, Hillary Clinton winning. So it's gone from 85 to 65. The new FBI investigation, and I'm not going to get political, but all of these things have come in and have brought the probabilities of Hillary winning to be a lot lower than they were a month ago. And because of that, we have seen an increase in volatility. Here's a look at the stock market, the S&P 500. You can see really for the last month, as the probability of Hillary winning has decreased, volatility has increased. And when I say volatility, I'll explain a little bit more about what that means. Just know that the market's going down. For all those people that are wondering, the market's going down. And that's not because the market wants Hillary over Donald Trump. I don't believe that. I don't think the market cares. All the market wants is certainty. And the greater the probability of one candidate winning over another, then that creates certainty in the market, and the market then most likely moves higher. When there's uncertainty, which we're seeing now, then the market gets a little jittery and people sell, which is really dumb, but that's what they do. And then we'll see this volatility. And another chart just to show you what volatility is. And by the way, we're about 5% off the highs for the S&P 500. From where we were to where we are now. So the market has sold off. And volatility increasing. Here's one of my favorite things to look at. It's the volatility index. It's the VIX. Simply put, When the market goes down, the volatility increases, right? So you see these spikes. The beginning of the year saw a lot of volatility. The market sold off. Chinese fears, oil fears, right? Volatility went higher. And then it went back down as the market went higher, right? It's an inverse relationship between this chart and the S&P 500. This summer, we saw some uncertainty. Well, volatility increased. This fall, a little bit of uncertainty, volatility increases, and that's where we find ourselves. Now, what I look for here, and the reason why I like it, here's a 2-year chart of volatility, of the VIX. And any time you get a quick spike in volatility, which corresponds with the market going down, provides great opportunities. You can see here in late 14, early 15, anytime that the market or the VIX crosses this red line, and it's an area, 20, between 20 and 25, that's tremendous opportunities in the market. We saw it last summer, right, in August, not, in 15, great volatility, which provides great opportunities. We saw that in this time frame, early 16, saw it a little bit, through here, and now where we find ourselves is an increase in volatility, which corresponds with the great opportunities. And what I mean by that, it's pretty simple. When we see the market fall, and when we see the VIX pop, that's great opportunities to buy stocks. That's great opportunities to do options. That's great instead of being fearful and wondering, oh my goodness, who's going to win the presidency or anything like that. No, you don't worry about it, but you take advantage of those opportunities. And I'll show you here in just 1 second what exactly we're doing to take advantage of those opportunities. Okay? A couple things to keep in mind from a historical perspective. November, since the early 1900s, the S&P in the month of November has averaged about 1.5%. That's pretty good. It's one of the best months of the year. December averages about 1.7%. And it doesn't go straight up, and there's going to be volatility along the way like what we're seeing now. But if you're just looking at historical averages, November, December should be, and I say should be pretty decent months in the market, right? So what are we doing to take advantage of this volatility and historical November returns? Well, what we're doing is we're putting cash to work. We've had arguably a little too much cash in our portfolios. We're putting that cash to work now. We're buying great businesses. There's many stocks in many sectors, or in a few sectors, that have just been thrown out. Well, now is a great time to buy those stocks if they're great businesses, and that's what we're doing now. And we're not only doing that, but we're selling puts on those stocks that are great businesses that we want to own. And I spoke with a client today, just this morning, and we talked about that strategy. And I named the stocks that we had sold puts at, and named the stock prices that we could potentially own those stocks. And he was happy, right? That's the strategy. And then we also, at the same time, we sell put spreads for those that are familiar with options on certain markets and on certain stocks, right? To take advantage of the volatility. So that's what we're doing now. I've got one piece of advice for you for the month of November, and really for always, right? For as long as you're investing. And that is volatility, as it's increasing right now, is the price that you pay for solid returns. So everybody needs to be patient and not focus on 3 months or 6 months or 1 year, but focus on 2, or in the case of the clients I mentioned earlier, 30 years, 40 years. How is your portfolio going to look based on what we've been able to do since 1999? How's it going to look? And that's what you need to focus on. And here's the great quote from Warren Buffett. He said, the stock market is a device for transferring money from the impatient to the patient. And I love that. I love that quote because it's so true. Most people focus on 6 months or 1 year or maybe even 2 years. And they don't focus on 5, 10, 15, 20. And by not doing that, you will destroy your wealth. because of what Warren Buffett's saying there. And if you need somebody to sit you down and say, you know what, here's what your life looks like in 5, 10, 15, 20 years, 25 years, 30 years, 40, whatever it is, then that's where we come in. Remember, relax. We can take it from here. There's our contact information if you have any questions. I hope you all have a great month of November. Remember, anything we've talked about is not advice. Feel free to reach out and discuss it more and see if it pertains to you and your situation. Thanks, folks.
This is a purely public broadcast and is not intended to be personalized financial advice for any individual's specific situation. Each individual's financial situation is unique, and the topics discussed on this broadcast should not be relied upon and or considered as personalized advice. Specific financial securities discussed are not intended to address any listener's particular financial situation and should not be considered recommendations. This is for educational purposes only. For more information, please contact Iron Gate Global Advisors at info@igga.com or by calling 888-591-0334.